It's about that time of day again. My name is Joseph. It's Wednesday evening, December 7th, 2016. This is your nightly newsletter. We're covering crude, S&P, gold, euro, and FDAX this evening. Crude oil is bearish, but trading at the low of a bear spike in channel tells the sellers to wait for a rotation back up to the highs of the channel tomorrow. The S&P is bullish, but after a massive run higher today, we can assume that buyers will be hesitant to buy more until they get a deep pullback off those highs. Gold is bullish, but struggling to break through the highs of a trading range, which tells the buyers to look for successful breakout pullbacks above range highs, or they gotta wait to buy the lows of the range tomorrow. The euro is bullish, but we have a lower high on the chart, which tells us that buyers are weary of buying such a high price. So our goal tomorrow will be looking for a correction into the battle zone for a retest on the euro. The FDAX is bullish, but this parabolic move higher today is hardly sustainable, and buyers know the most reliable opportunities will come after a deep pullback off today's highs. Boy, another exciting day today. I had a great day with all of our students in the trade room. I hope you guys had a great session as well. We're back for another newsletter. Got a great plan for you guys tomorrow here. Before we jump into our charts, though, please don't forget the full-length version of this video is only available on our blog at sidewaysmarkets.com. If you're watching the YouTube channel right now, if you're watching this video on our YouTube channel, it's only a small snippet of the entire version of this video. Make sure you follow the link in the description of the YouTube video and come over here and join me on the blog at Sideways Markets for the full-length version. While you're here on the blog, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Download those charts. How easy is that? Have all those charts on your computer ready for tomorrow's trading session. And please don't forget, in the upper right-hand corner, make sure you grab your free pass. If you're not a member here at School of Trade, make sure you grab your free pass. Come out and join me as a guest in the trade room here. You're going to learn more with me in a few hours in that free pass than you will anywhere else on the interwebs. And don't forget, if you're brand new here to the School of Trade community, get a great frequently asked questions page on our website as well to learn the who, what, where, when, and why. And of course, don't forget, I'm always here standing by to help you guys out 24/7 if you have any questions along the way. Let's jump right in here tonight. Let's see what we got on the schedule for tomorrow. I do want to remind you, the final nightly newsletter of the year of 2016 will be tomorrow evening, Thursday, December the 8th. I don't do them on Fridays. And of course, as of next week, it'll be the third week of December. I'm going to be in resting, refresh, and refocus mode here, going to the end of the year here. Got some big plans setting up for 2017 for all of our members here at School of Trade. So we're going to get into work there on those plans for 2017. So once again, the last nightly newsletter of the year 2016. It's been a wonderful, wonderful year so far. The final newsletter of the year will be next or tomorrow evening at Thursday, December 8th at 8 p.m. Eastern Time. So make sure you tune in. I'm not going anywhere, of course. Right, but for the next 3 weeks, I'll be focused on building School of Trade, right, bigger and better than ever. We had a great record-breaking year this year, and I got some big plans coming out for 2017 as well. As always, though, we got a plan here for tomorrow. Let's not forget about that. We're not done for the year yet here, though. Tomorrow's Thursday, December the 8th. We got that big ECB announcement tomorrow. I think everybody's going to be waiting to hear what Draghi's going to say tomorrow morning at 7:45 a.m. Now, don't forget, just like the FOMC announcement, this is just the announcement at 7:45, and then we're going to have that press conference that usually runs until about 8:45, 9 o'clock. I've seen them run as late as 9:30, 9:45 before. So be aware of that tomorrow morning. If you're trading euro or gold, those are the two markets that will most likely be affected by the ECB announcement. I would expect those two markets to be a little bit quiet here in the overnight session as we wait for the ECB announcement tomorrow. So make sure you mark your calendar for that. That will be a market-moving event. Outside of that, I'm not too excited about anything else here. I'm not expecting much of the housing starts, the jobless claims, a waste of energy. Pretty much your typical Thursday tomorrow, with the exception of the ECB announcement. That's going to be the major market mover. Again, I don't expect to see much out of the jobless claims tomorrow. Nobody really cares about jobless claims anymore. The big number, of course, is the employment number, the first Friday of every month, which we had last Friday. It's been a great week here so far, but as I always remind you, we're only as good as our last trade here. Let's get ready for tomorrow's price action. Got some great charts here to look at for you guys tonight. We're going to go crude, S&P, gold, euro, and we can't forget about the FDAX here this evening as well. Let's jump into the oil here. Crude oil is bearish, but trading at the low of a bear spike in channel tells the sellers to wait for rotation back up to those channel highs where they can expect to find much more reliable selling opportunities for a move back down to possibly that 50 round number again tomorrow. The buyers have two options right now. They can either buy a possible channel overshoot for a move back up to the highs, or they can buy the seller failure at the battle zone for a move back to retest today's highs. Either way, the buyers have to stay patient here right now. As you can see here today, nice strong move lower here. Today was an inventory day, so it was a little bit sloppier, right, because of inventories. That leads into a spike in channel. The spike in channel really tells me to focus on this area right up here. Sell the high of a bear channel. We all know that, right? We talk about that stuff all day long in our newsletter, and we, of course, do this every day with our students in our trade room. When it comes to the spike in channel, though, I want to be looking at the correction zone here, right? The base of that channel, right, and these pullbacks here. So this is going to be the sweet spot for those sellers. Really, when I look at this chart right now, I know where the most reliable trades are going to come. The most reliable trades will come up at these highs and then right back down in. That means the buyers have some chance here to buy off these lows. The sellers, of course, though, want to be careful selling at these lows. What you want to be thinking right now is these two areas on the chart, either low or high, whether you're going to be a buyer or a seller. The sellers, of course, have control right now, so let's play the game, right? What are we looking at for sells right now? For the sellers here, we have to clear through these lows real strong, right? And then hold that pullback below the measured move, below the low of that channel. This isn't going to be easy. It's not going to be easy. So if we're going to look to sell a new lower low here, it needs to be obvious that these sellers are looking for or interested in lower prices, right? So it requires a lot of strength. Get that moving average down below the double down at 49.5. Remember, sellers will keep selling until they reach their objective. They sell off the high of the channel. They reach their objective at the low of the channel. Now we're going to take a time out. If this price goes lower, they need to convince us that they're now looking for another objective, which is probably not going to be very easy, right? Especially with that $50 a barrel waiting right overhead. So they need to convince us. I don't want to sell into these lows here. It's got to go strong and then hold that pullback below. Again, that double down is the lower of the two levels there at 49.50. Looking for a breakout pullback there, right, to be a seller. The opposite side of the spectrum, obviously, we go up to those highs, buyer failure, back down. That's the easy part, right? That's the easy one. That's the most reliable one. And what you'll probably end up seeing is something like this, right? Price goes up, flattens out, right? And then we get that sell back down. So this is where the buyers have a shot to grab some scalps on the way higher, but be careful. You don't want to sell. You don't be buying into that resistance trend line overhead. This, of course, now is where they stall out, right? Break out, pull back, and then back down. So really, as the sellers are looking here, it's buyer failure coming off of the high, and it's breakout pullback for the move back down. So sellers either see a ton of strength through these lows, below that double down, or wait patiently for that price to rotate back to the highs so we can sell it back down. Now, what about the buyers here? What about the buyers? Again, looking down here at the lows and looking up here at the highs. Again, there is potential here for some scalps on the way higher, right? Strong move up. The problem, though, is we run into this issue where as the market goes higher, you're going to see sellers try to sell into the high of the channel, sell the swings. So it's just this area here, trying to be a buyer here, you really got to get to it quick. And the problem with trying to get to it quick is you may not have enough confidence yet that this is a bull market. This is a very strong bear market right now, right around 50. Do I really feel confident trying to pick a bottom right now? It's not going to be a very reliable buying opportunity trying to buy on the way back up. I'm not going to say it can't be done, but it's not going to be the most reliable opportunity, right, that we get every day. Just because the stronger the move, the closer it gets to the high of that channel. So you really don't want to buy the high, but you need to see a strong move to be confident to buy this market. So, yada, yada, yada. Let's keep going here. Now, one option here is kind of think about the scenario here. If price goes lower, but remember we said earlier we got to get some strength going through that low. Well, typically what happens is you get something like this. The market breaks down, it gets the measured move, it tries, and then blammo, right? It kind of comes, it gets snapped back in, right? You have that short covering rally, the sellers get forced, right, to liquidate their positions, and price jumps in. So what you want to be thinking about, the most reliable way to do that is going to look like this. Again, don't sell this area down, don't buy this area down here, but once that breakout pull back, that's going to be something now that's definitely worth our time, because now we have the sellers are trapped. They've got to liquidate their positions. That's going to throw some fuel on the bullfire, if you will. And then, of course, now we're buying the true low of that range. And so we actually have enough room to go back up to that high. The other option is going to be if those sellers can't quite get the job done, right? So we go up, we chop around. Sellers, for whatever reason, sellers can't get the job done. Maybe we hear from OPEC tomorrow. Who the hell knows? All we know is that if it does break out, pull back, the key is going to be a strong move through that 50 half area, 50, 64 area, right? And then look to hold above the 64 battle zone. And of course, the target be back up to retest that high. Pretty easy stuff here on crude. I think the hard part right now is just staying patient. Sellers want to sell off the high. Buyers want to buy off the low. Be careful not to sell into that low or buy into that high tomorrow if you're trading on crude. Let's keep going. How about some S&P? Woo, that's a big bull market. But after a very bullish here today, obviously, but after a massive run higher today, we can assume that buyers will not only take their profit here, but they'll be hesitant to buy more until they get a decent pullback off the highs. Typically, when we see a hockey stick type move like this, we end up seeing a trading range develop the following day with a bull bias. So our plan will be to look for traps and failures around support levels waiting below us to give us the opportunity to participate in this bull market without buying high. Sellers, on the other hand, have zero proof, so they need to wait patiently until we can get this market to literally collapse off the highs and hold the pullback. Really, when you see a market like this, obviously we're bullish. I don't think you need me to tell you we're bullish right now. We cranked through those all-time highs from yesterday. A very interesting situation too, because we had the battle zone laid out last night in the newsletter. So if you waited for the pullback, you were in the position to ride the whole entire move up today. Another reason why to keep in touch every evening on this nightly newsletter. Usually, and we're going to see an example of this on the FDAX as well, usually what you want to, you see this kind of hockey stick type of move here, buyers aren't going to want to buy this high. And oftentimes, these types of moves will end up developing into a trading range because buyers just don't want to buy high, right? They'll focus on buying low, but it can't quite get through that high. So whenever I see a real strong move like this, I'm always thinking, right, look back at these prior areas of support. I got a bunch of them listed here. If I had to guess, I would say this area right here, right around that 29, right to 26 area here, that really looks like a real tasty area here. Again, we don't know enough about this yet right now, but we do know here that a pullback to a area of support here will definitely be what the doctor ordered here for the buyers, right? So dipping down in, right, buying, and then trying to get this market back up. Now, one thing to keep in mind is this lower high is creating a resistance trend line, right? That trend line now coming over. Now, nothing's obviously guaranteed on this, but oftentimes when we see a resistance trend line, this prevents the buyers here from buying into it, so it can really collapse pretty strong there and then give us the chance, right, to buy off that low. So keep an eye, right, be thinking about something like this here tomorrow, right, as this market pulls back, right, buyers don't want to buy into that trend line until they get through it. Right, so kind of get through that trend line, and then you can feel confident, right, being a buyer back up to retest the high. Remember, the buyers will keep buying until they reach their objective. They've got their objective already there at 2240. When they pull back off that high, where's their objective going to be? To retest the high again, right? So targets go up at the high of day, and if we do get that pull back and then back up to retest the high, then we're looking for more information, right? Do we break through and keep going? Right? Do we get that moving average to join us? Do we see a real strong move through it? Do the buyers give us tons of proof that they're looking for more? Do we see strength through the highs, right? Or do we simply see profit taking at the highs and look to buy the low of this, right, of this trading range again. It's a little bit difficult again to tell exactly where the range is. The range may be this, right? This may be all we get for the trading range. And of course, if that's the case, it'll take a little bit more time to wait and see that range develop, and then you can buy the low of that range. So keep an eye on these areas of